Alright, check mic 212. Let's check the sound quality as always and the quality of the picture. Okay, great. So let's start. I welcome you all on today's webcast, which is dedicated to the smart trading. And as we know, smart trading is not just about the smart risk management and market timing, but it is also about the smart orders that allow us to maximize our returns and to minimize the risk. So I want to focus today on these smart orders that we have at Bitsgap, which is the Twap, shadow order, the stop limit order, multiple take profits. So we will cover all of these tools that you can use every single day to maximize your returns and to minimize the risk. To quickly remind you, my name is Dmitry. I'm the portfolio manager trader, and together with Bitsgap, we are working on the platform optimization and creation of new tools for you guys to beat the market. So we will also cover the risk and return metrics. Basically, that's the element of return and loss projection before you actually initiate the trade. The trend analysis, so I will show you 3 indicators, pretty easy to use for the trend analysis, basically to identify whether the trend is strengthening or it's losing its upside momentum. So yeah, also we will cover the SBot and the Classic bot, what makes them different. So I will show you real examples of when it is the best time to launch the SBot and the Classic bot. And at the end, the QA session as always, and also during the webcast, I will look at your questions to find the most interesting to answer. And of course, we have the support team in the chat, so they will provide you with meaningful answers as well. So let's jump straight into the action and go to the Bitsgap platform. So as I log in, this is the interface that I have here. That's the trading section over here, and let's switch back to let's use the demo mode, because the cool thing about the demo mode is that here we have virtual money to trade with, and we can use this virtual money absolutely risk-free. So basically, using virtual money, you can experiment with the limit buys, sell orders, market orders, stop limit orders, basically to learn what it takes to enter the market or exit the market with the stop limit and other tools that we have. So on the left side you have the board where you have the information, like I will switch back to the real account just to show you the real order book, and let's switch to ordinary spot market. Let's check what is going on with the BTC. Okay. Oh, it's actually doing pretty well. That's nice. So anyway, here you have the order book to see what is the current demand and supply on the market, recent trades, and the cool thing that we made is basically the ratio of buying and selling volume on the market, which depicts the balance between the buyers and sellers. So you can see exactly how did the balance change since the last 30 minutes. So you see whether the market is in favor of buyers or sellers. So basically, what is the dominance right now on the market? And you have this visualization. Yeah. So let's continue to see what else we have here. So we made it look like this, so that on the left side you have the analytics layout, and you have the chart where you can conduct your technical and fundamental analysis. And we will cover the technical analysis today a bit. I will show you some tips and tricks related to 3 indicators, which is the moving average, the RSI, and the volume profile, which is a bit sophisticated, but I will explain to you like the major tips of this volume profile so that it's going to be easy for you to understand how to use it. So anyway, this is your chart layout, and on the right side you have the decision making board. So this is where actually the magic happens. We start with the limit orders. So let's switch to the demo mode and I will show you some sample trades. So limit order is a pretty simple one. Here you are the market maker, and since you are the market maker, you pay the lesser fee compared with the market order, because if you want to instantly enter the market with a buy, let's say you want to buy Bitcoin, or let's say you want to sell Bitcoin, then instantly your order is executed, and for this first priority execution you have to pay a slightly higher fee compared with the limit order, because in the limit order your order is displayed in the order book, and you are kind of in a queue waiting for the exchange to execute your trade in accordance with your priority, and that's why you pay less fee. So let's say you want to buy, right now I have inch to USDT, let's say 10% of my portfolio. Let's see if I have enough of the USDT. The current price, so you see 10%, 25%. So it takes like the calculation of your available USDT. So it turns out that 50% is exactly 3,200. But let's use, let's say 300 USDT at the current price, maybe a bit lower, let's say 73. Yeah. So what I see here is the take profit and the stop loss. So speaking of the take profit, here you have the option to set multiple targets. And the cool thing about multiple targets is that you can sell out your position proportionately. So let's say you want to sell 20%. No, actually it's over here. Let's say you want to sell 20% of your entire position as soon as the price reaches 5, which is somewhere over here in this area. And that's exactly corresponds to the growth of 5.71% from the current price. So you can also set it to 10%, and it will automatically calculate the exact price at which it's going to execute this take profit. Let's say I want to sell here 30%. Okay, so we have 20-30% split, and 50% is left, so we can make like this to 6 and to 7. So the cool thing about this instrument of having multiple take profits is that, first of all, it spreads the risk, and it also maximizes the return, because you are not selling everything at the price of 5, but gradually you are getting rid of this position. So you are exposed to the minimized risk and maximize return in this case. And the cool thing about Bitsgap is that you have this return projected, estimated like 71 USDT is exactly what you can expect from this trade as the maximum profit if all take profits are hit by the market. So this is the profit that you can expect from this trade. And as of the stop loss, let's say we want to plot it at 4.5 or somewhere around this area. That's 4.4. So you say from the current price down to the stop loss, which is down by, like, the gap is 7% from your entry price. And the risk here is losing 20 USDT. So you risk $20 for the reward of 71 USDT. Okay, so speaking of win to loss ratio, this trading configuration looks legit because you risk less in order to have like 3 times more than you risk. So this one is an optimal configuration. if your projected profit would be, let's say, only $10 and your risk $20, then this is definitely not the optimal trade, because you risk more to have only $10, which absolutely makes no sense from the risk to return standpoint. All right, so let's just go with it. Okay, let's click on, what's the current price? 70. Let's plot it at 70. Yeah, so you plot buy inch, and you see the limit buy order is on the chart as well as in the order book. All right, you can see this trade over here in your open orders as well. You can click on plus to see all the take profit areas. That's the exact amount it's gonna sell at the price of 6.95. So yeah, everything is here. That's the TP, which stands for the take profit, and the SL, which stands for the stop loss. If you are not satisfied, like, I mean, if you want to make some changes, then just click on this pencil over here, and you can change all of this configuration in accordance with your new rules. So the cool thing is that it is displayed on the chart already. So let's zoom out. You see, limit buy, stop loss for this trade, and all the take profits that I set, which you can actually move like manually on the chart, or you can just change the number manually over here. So yeah, once again, multiple take profits allow you to spread the risk, to maximize the return, and to minimize the loss, like the risk in this case. Because the difference between the unrealized and realized return is huge. Because, for example, I have right now, let's go back to my real account, to futures. So you see right now I have profitable trade. It just brings me $35. That's the futures position. So I'm in the profit of 35. But this is the unrealized return, all right? So it means that I'm still in the market and I do not really possess this 35 USDT until like the moment when I exit the market, either did the market sell or market limit sell order. So right now that's the unrealized. That's something that I do not possess yet. Whereas when I close it, it's something which is already in my pocket, like it goes to my pocket. So that's the same case for any open trade. And that's why setting take profits, basically you ensure that as the market rises, you see it executes and cashes out from the market. So it fixes the profit, and something goes to your pocket, like 20%, I guess, in this take profit zone. Then it goes higher, another 20%, you see, goes directly to your pocket. So that's how you make sure that you are gradually extracting the profit from the market. And this can be easily achieved with these take profit multiple targets that we have at Bitsgap. So there is a question about the stop loss and the trailing up. So the thing about the trailing with the stop loss, let's just cancel all of my ugly drawings here, and let's switch to another trade, maybe other trading to BUSD. So yeah, the thing about the stop loss is following. So I mean the stop loss which has the trading up. So imagine you entered the market over here, and then it started to bars. No, that's not the one. Ghost fade. Yeah. So let's assume the price goes higher like this. So now your open position is in this area, right? And initially your stop loss, let's assume it was somewhere over here. So at the time we launched it, This was the entry price, and that was the stop loss. This was the trading setup, and let's see the gap. Let's see the gap between our entry price and the stop loss. So it's exactly like minus 2.59%. So as the price goes higher, your now position value is here. So the stop loss is gonna move together with the market. So it's gonna maintain the same gap of 2.59%, right? So your stop loss is gonna be here. So from that point A, that's point A, up to the point B, this what trailing enables you to do. Like the stop loss is gonna follow your position, because if from that point over here the price then suddenly falls, the stop loss is gonna be triggered, and in this case you realize the return. So the stop loss here is not your loss order. It's more like the take profit already, because it's above the entry price. You see, the entry price was, remind me, over here, right? And the stop loss initially was over here at point A. Let's use another one. Yeah, so this green line, that's the entry price, and that's the stop loss at the time we initiated the trade. So at this point, this would be a stop loss. It would fix the loss in case if the price would fall, right? But hopefully this won't happen, and what you will say is the price going higher, the stop loss will follow the market, and in this case, since it is now higher than the entry price, it's gonna act as a take profit. All right, so using the trading stop loss makes sense to, again, maximize the return and to minimize the risk. Okay, because it ensures that even if it falls after a short rally, that you won't lose all the return. You would lose a portion of your return, and thanks to the trading stop. So let's remove all the drawings. So this is everything about the limit buy and sell orders. Pretty easy, and yeah, use this take profit, multiple targets, and the stop loss, projected return, projected loss, to use as key metrics for you to analyze the potential risk versus the potential return, and make sure that your return is significantly higher than the loss, because otherwise it makes no sense to risk the money. So let's go further. The stop limit. So the interesting thing about the stop limit is that you have this new section which is known as the stop. It is also known as the trigger price or the conditional price. Well, call it as you want. The point here is that let's assume that you want to enter the market at certain conditions. So you look right now at the chart, which is the AVA trading to BUSD, and let's say blah blah blah, you made your research, and it turns out that you expect the market to continue the rally like this, right? But you don't want to enter the market at this current point, because you want to see the price breaching the previous higher high. You see, HH, okay? So you want to see the price to breach this point, and only after it breaches this point, you will enter the market. So how to do this? So you set the buy stop at this breach level. Let's set it at 385, and let's set it like the limit buy also at this point. Okay, and let's say 10%. Okay, let's remove all the drawings. Okay, so for some reason I cannot, since I don't have the BUSD, that's the problem. I don't have the BUSD. That's why I'm not able to buy it. Okay, so let's go with AVA to USDT in this case. So that's the previous higher high, and I expect the market to rally. So let's set it at 385. Yeah, So here we go. So the point here is that once the price, and let's use this brush, once the price goes higher, it reaches this previous higher high level, and then reaches the point where we have the stop condition at 385. So as soon as the price reaches this point over here, it will automatically open the limit buy order. Okay, because otherwise it would be impossible for you to enter the market with such conditions. All right, so if you would set your simple limit at the price of 385, which is apparently higher than the current price, it won't wait for the price to reach 385. It would instantly execute the trade at the current price. You see, let me show you the example, like with 100 CPI other. You see, it placed it, but it executed it at the current price. You see, 373, that's what happened. But if you don't want this to happen, then use the stop limit buy, because in this case, it ensures that it only buys at certain conditions, which is defined by the stop price. So let's use it again. So you see, now I have my stop limit over here. So that means as soon as the price reaches this level and breaches the previous higher high, reaches 385, it will open here in this area at the price of 385, the limit buy order. Okay, so that's the thing about the stop limit order, that you can postpone the trade so that only once your conditions are met, it will enter or exit the market. So that's why it is known as the stop limit, because stop here acts as a certain trigger price. And the example how you can use this instrument, this smart trade instrument, I demonstrated already. So it works the other way around when it comes to the stop limit sell. Let's say you want to exit the market only if it breaches this lower low over here, because what you know that once it breaches this price level, most likely it will continue the downfall. Okay, well, it's just hypothetically, let's assume that you expect if it breaches this level, then it will continue the downfall. So the condition here is that it has to breach this price. So this is where you can set your stop limit sell in this case. So once it reaches this level, it will sell in this case. And you can also use the stop limit as an ordinary stop loss to sell, let's say, a certain stake out of your entire position. Let's say you want to sell only 20%. So using this stop limit is the exact smart trade that you should use. So now let's move on and let's see what else we have. We have the Twap, which is something I covered like 2 months ago, I guess. So the Twap is the perfect tool, like that's the perfect smart trade instrument for those who want to enter or exit the market, how to say, as calm as possible, because there are some cryptocurrencies that are illiquid, like literally nobody, like almost nobody is trading this crypto, and we know there are quite many of these cryptocurrencies that are highly illiquid, and that means that one single trade worth, let's say, $1,000 can create a significant red candle. Yeah, just 1,000 can literally affect the market significantly. Or just buying with $1,000 can also create a significant green candle in this case. So in order to avoid this extreme volatility that you can create on highly illiquid crypto, and using Twap is the solution for you, because at Twap, let's say you want to buy 30 AVE. No, let's actually use 10. which is worth 3,700. But it won't buy 10 Aave instantly at the current price, because otherwise, let's assume that Aave is illiquid crypto and this volume would significantly affect the price. You don't want this to happen, right? So it will split this buy trade by like across multiple buy orders. So, and you also set the buy period. So let's say you want to buy 10 Aaves within the period of the next 6 hours using 50 buy orders. So it means that per each order it will buy 0.2 Aave, which is significantly fewer than just instantly buying 10 Aaves. So this is how you basically spread the volume across multiple buy orders to enter the market as calmly as possible. So you don't want to create the noise around your big trade, and this is something that you should consider if you are trading highly illiquid coins, or if you are a wealthy individual and let's say you have intention to buy maybe 40 Aaves. No, actually, let's use more, like 100 Aaves, which is $37. This can actually affect the market, and that's why you would consider Twap, so that you would gradually enter the market at the best entry price as possible. Okay, and same applies with the Twap sell. If you don't want to make the market crazy, like you want just to spread this high volume across multiple orders, then Twap is the option for you. It will automatically sell 100 Aaves with 50 orders. Each one is 2 Aaves within the period of the next 6 hours. Okay, fully automatically, and this is what you should stick with if you don't want to create the noise around your trade, if you are trading a highly illiquid coin. So that's what Twap is all about. Or of course, it's maybe not just about spreading the risk. You can also trade Twap on ordinary cryptocurrencies, like let's say BNB to USDT, which are highly liquid. There is a lot of volume here, a lot of interest here. So apparently, if you want to gradually enter the market, then using Twap is the option for you. Let's say you expect the market to fall a bit from current price down to this. So as it falls, you want to make sure that it buys. So using Twap is the option for you. Let's say you want to buy 2 BNBs within the period of next 6 hours using only 10 orders. So basically you will see the system executing trades as the market falls. You see one order worth 0.2 BNBs, second order, third order, up to 10 orders. So basically 1 order per hour. That's the point of Twap. So that's how you can use it as well to make sure you enter the market with the best entry price based on your expectations. So let's remove the drawings and let's see what else we have. Well, the shadow order is something that you're gonna use if you don't want your trade to be visible in the order book. Maybe you are willing to sell like a big stake of BNB or any other crypto. It's mostly related to highly illiquid coins, because imagine you are trading a lesser known coin, like literally nobody knows this coin, and you expect it to rally, but once you see in the order book, in the order sell book, a huge position to be sold, so this would drive you crazy. You would think that this dude will crash the market down, right? So this dude would rather use, in this case, the shadow order, so that nobody would see his trade until the price reaches his price as it sets. So let's say this dude wants to get rid of BNB is worth, I don't know, 40 millions or whatever. Okay, no, actually that's the price. Let's say 289. Let's say, yeah, let's assume that's the position he wants to get rid of. Imagine that with a simple limit sell order, everybody would see this trade and they would just go crazy. This would drive the market down for sure. And the cool thing about the shadow is that nobody sees this trade until the price reaches 289. So only when the price reaches this price level, the system will execute the limit sell order so that nobody sees it actually. So that's the point of the shadow order. If you don't want, again, to create a noise around your trade and you don't want to be placed in the order book. Okay, so that's the feature which is good for wealthy individuals so that nobody sees your big trade. Yeah, so let's move on. Actually, that's everything that I wanted to show you regarding the smart trades that we have at Bitsgap. I would suggest you, if you haven't tried it yet, to start with multiple take profits and the stop loss, and as well with the stop limit order to trade based on some conditions that you determine for the market. So now let's go to the topic of top 3 indicators to use to analyze the strength or the weakness of the trend. So the first one would be, let's actually go to the trading view because there I have more options to show. So let's go to the trading view. So trading view, you can set, but you can actually do this at Bitsgap over here as well. Moving average, I need, well, I usually use the, let's see which one I use. Yeah, actually the exponential is the one I tend to use. And the first one I set the length of 100 and I want to make it bigger. Can I make it bigger? Yes, make it yellow. And let's use another one. Let's set it at 200. And this style, let's use the orange and white as well. Yeah. So regarding the moving average, basically it shows you how the price is now trading relative to its average past performance. So you have this EMA 100 and EMA 200, which is basically the period, and the bigger the number, the higher is, like, the longer is the period taken into calculation. So the stronger is this line, well, you can say like that. And once you see the price trading above these moving averages, that means that's basically a strong bullish signal. Whereas when you see the price breaching and trading below the moving averages, that means that the trend might be losing its momentum, upside momentum, and it might be the scenario of its further downfall. Playing with the time frame also makes sense, because the longer the time frame, the more statistically valid is the data. And using shorter time frames, that's basically for the intraday traders who are, or swing traders that, let's say you open the trade at the morning and you close it the next morning. So that's pretty much the intraday trade. So that's why these traders, they stick with the one other chart layout, and that's why you see lots of noise around here. Whereas when it comes to longer time periods, you see fewer noise, and on a longer time frame it definitely looks like the Bitcoin, no, it's not the Bitcoin, it's the BNB is doing pretty well. It's trading above the moving average, so that's the bullish projection over here that we can see. Let's maybe go to 1 inch to BUSD. That's not enough data here. Let's go to our USDT for hour. So right now you see the price trading exactly at the point where you see the intersection of moving averages. So this is identified as the period of consolidation. And once the price, let me use the pointer. And once the price goes higher, so it trades above moving average, this is going to be a strong bullish indicator for you. If it trades below, then, well, it's pretty much in the consolidation phase right now, but if it goes even lower, then this is going to be a bearish signal for this particular crypto. All right. I mean, it doesn't mean that using only these two indicators, you get 100% golden signals. Like every signal you see, like if the price is trading higher, then definitely the trade is going to move even further higher. Or if you see the price trading below these lines there, that means it's going to fall downward. Now, using multiple technical analysis tools, as well as the fundamental sentiment, is exactly what you need to be like to increase your odds of success. Because the thing is that, let's say Elon Musk is going to tweet something in 10 seconds that will move the market further up or down. It's just something that can happen which significantly affects the fundamental sentiment on the market. So it's basically people that are driving the market, not these technical indicators. Technical indicators are used just to show you a broader picture of what is happening on the market. And using moving averages is one of the options for you to analyze the strength or weakness of the trend. So right now for our USDT, it looks like it's in the period of consolidation. So from my standpoint, I would rather stay away from this trade for a while until it goes higher and trades above moving averages. So that's how you can use our moving average. There is also another tactic, like strategy, looking for the crossovers. Basically, when the short-term moving average breaches from above the longer-term moving average, this is the signal that the market is gonna go lower. That's exactly what happened over here, you see, and then later it breached from below, and now we see the market is in the consolidation phase. So that's how you can use it as well. Anyway, let's move on and let's see what else we have. So we also, by the way, the price of Bitcoin right now is $60, and I hope it breaks this 61,700 so that we go even higher. So let's use the second tool that I wanted to show you, and that's the volume profile. So let's use the visible range, and let's use the one which is available for basic subscribers, which is free of charge. Let's go from that point. So what you see here is that it shows you the volume per each price level, basically how much was sold and bought on each of the price levels. And this red line, it shows you where the most of the volume been traded on the market. And that's basically the biggest point of interest. And you will find out that naturally this line exactly aligns with the support and resistance levels. So that's why using this tool can also show you support and resistances on the market. So as a general rule of thumb, when you see the price trading above this point where where we had the most volume traded since the 28th of February, that means that we are having a bullish momentum over here, and that basically this is a bullish signal for us that the trend might continue further. And on the right side, I have what is known as the visible range. Yeah, that's the visible range. And it shows me the volume traded from that point, which was at the 15th of January, up to current price. And you will see that from like, that's basically was the beginning of the year. Let's actually drag the line to the left. So yeah, you see 1st of January. Let's move it over here to be closer to the current price action. So since the end of January up until today, you will see that the most volume traded was at the price of 47,000. And since we are right now in the area above this price, that means that we are still having a pretty confident bullish market. And only once we bridge this level and below is gonna be a dark area for us. That's the area where if it breaches the 47,000, then it most likely it can drop even lower. So that's how you can use the volume profile, which basically shows you which price level has been the most interesting for the market. And if we are trading above this point, then that means we are in a bullish momentum. If it is trading below, then most likely the price lacks buying pressure on the market to move higher. And that's the bearish signal in this case. So right now, based on the moving average and based on the volume profile, it looks like we are having a pretty strong, pretty confident bullish momentum on Bitcoin, which is good for other cryptocurrencies as well. So what I show you here is not the financial advice or whatsoever. These are just tools, and there are many tools like this that you can use, guys, to analyze the market and to create best strategies so that you will find the best entry and exit price for your smart trades. Okay, so the third tool would be, let's remove all the drawings, also this one. So once again, how you use it, you see, you have it over here, fixed range. That's something that is not available here at this layout, even though it's from the trading view, but it's a bit limited. So if you want to use the volume profile, that's on the trading view in this case. Whereas other tools that you need is the RSI, moving averages are here. RSI is something that you can plot as well, relative strength. So it basically shows you the overbought and oversold scenarios on the market. As a rule of thumb, when you see the line at this area or above, that means that the market right now is extremely overbought. So you see this point, from that price it went lower. Once it went down to the area where we see the oversold, in this case, this is a buy opportunity, and you see right after it breached this level, it started to move higher. So that's how you use the RSI. It basically shows you the overbought and oversold sentiment right now on the market. And on Aave to USDT, and let's actually switch to the real account. Let's use it on Bitcoin. So you see on Bitcoin right now, it looks like it still has some space to go until we will see somewhat of the distribution phase, when something like this, boom. See, because the market cannot go endlessly to the top. Sometimes like it needs space so that traders fix their returns. Some traders, they will open sell trades. So that's why the market always looks like moves like this, you see, gradually. And that means that on these phases, market participants, they either fix the returns or they open sell orders to basically contra trade the market. Crazy people. Remove drawings. So yeah, once again, the RSI, the moving averages, and volume profile, these are the tools that you can use to analyze the market sentiment from the technical analysis standpoint. Once again, there are so many strategies that you can find on the YouTube, many articles written about it, and we also have some strategies at Bitsgap blog. So you just go to Bitsgap, open block section, and you will find many strategies that I have prepared for you guys. You will find there the moving average, other tools like the Ishimoku Cloud. Everything is for you. Just use them to find which one suits you the most and which one you like the most, which one you understand the best, and use it accordingly. So yeah, let's remove all of this. So that was basically a brief introduction into the market, into the technical analysis. If you are a beginner at cryptocurrency trading and you've never used smart trades, then using this technical analysis and smart trades that we have enabled for you at Bitsgap is the ultimate solution to achieve maximized returns for the minimum risk. Okay, so you literally have everything at your disposal, like everything that you need to have smart trades. That's why they are called smart. You say you can have the projected profit, the projected loss, to estimate your risk to return ratio and all this stuff, all indicators to analyze the market sentiment, everything here at your disposal. So now the last topic is automated trading, and basically what makes the SBot, which you have here at bot section, SBot different from the classic bot. This is the hot topic as always, and yeah, some people are getting confused whether or not we should stick with the SBot or the classic bot, depending on current market conditions. So briefly, the SBot is optimal for the sideways market. So what is the sideways market? If you expect the market to move like this for a prolonged period, then stick with the SBot, because SBot's investment distribution logic is the best fit for the sideways market. So you will make more returns than the classic bot on this market scenario. So this one is for the SBot, whereas the classic one is optimal if you expect the market to go higher, like significantly, like you expect the market to go like this. Okay, so in this case, stick with the classic bot, because due to its investment distribution logic, it brings you more returns than the SBot. Okay, so that's basically what you have to choose based on your expectations. If you expect the market to rally, then that's the classic bot. If you expect it to move sideways, like the one we see right now on the Aave trading to USDT, you remember, where I show you the moving averages, and what they showed us is that the market right now there is in the accumulation phase. Then basically for Aave, it maybe would make more sense to trade as bot right now, because it's still kind of unclear whether it's gonna move higher or not. Okay, so that's what stands for the SBot and the classic bot. So once again, the difference is in the algorithm of investment distribution. For example, in case of the classic bot, it places a fixed amount of coins to be purchased or sold. So for classic bot, it will always buy and sell. Well, in this example, I have 10 coins. So it's gonna sell and buy always 10 LTCs, okay? And if 10 LTCs cost $100, it's gonna spend $100 to buy. If 10 LTCs cost $90, then it's gonna just spend $90. In this case, if the market from current price, let's use the brush, if from the current price it falls down to the lowest grid buy order, if we calculate all these buys executed, it's going to be exactly $340. So this is going to be your added position to your existing one. So once the market then hopefully goes higher, on this investment you will earn some returns. But comparing this scenario with the SBot, and I have it here on Reef. On Reef, the thing is that it doesn't stick with the, the SBot doesn't stick with the fixed amount of coins. It sticks with the fixed investment value. So it always buys worth $100 and sells worth $100. So if you can only buy 10 LTCs, then in this case it's gonna buy 10 LTCs. Of course, as the price falls, the SBot is able to buy more Litecoins using just $100 because Litecoins are now cheaper, right? So remember that here at ClassicBot we had 340 in total, and in case of the SBot on Reef, this would be 1, 2, 3, 4. This is going to be $400 in this case, right? So your market exposure on the downfall with the SBot is going to be bigger compared with the ClassicBot, and that's why you will have more returns, because having a position worth $400 compared with 340 is by $60 more, and that means you will generate more returns. All right. Yes, this effect is offset by the fact that here you have fewer coins to be sold, because here you see on the ClassicBot is gonna sell more in terms of the USD value. So that's why there is no golden rule whether the SBot or ClassicBot better or worse than another one. It's just that it depends on the market sentiment and how it moves. So for example, let's remove all these drawings. So for example, you expect the market to move sideways, but you don't know how exactly it's gonna move, because sideways market can be like this, right? It can also be like this. Okay, so it's never clear whether the ClassicBot is gonna outperform the SBot even on the sideways market. But as a rule of thumb, due to the old statistical analysis that we made and the historic performance, the SBot has proven to be more profitable than the ClassicBot on the sideways market, because the ClassicBot, it increases the exposure to the base currency as the market rallies. You see, it spends more with each grid level as the price goes higher, because it needs to buy or sell 10 coins as the price goes higher. That means that your investment exposure is bigger with the ClassicBot, and that's why on the rising market you have more LTCs generated than the SBot, and that's why you will earn more. Whereas on the sideways, SBot offsets the downfall by buying more coins using cheaper price, and that's why it quickly offsets the downfall that you had on this cryptocurrency. So that's the difference between the SBot and the ClassicBot, and that's I think the best explanation you can find. It might be a bit difficult for some of you, but I promise that you just need to practice and you will find which one suits you the most. And that's why at Bitsgap we have the demo mode, where you have virtual money to trade with, to experiment with, to find your best trading configuration. So you can literally simultaneously launch several configurations on one crypto to see which configuration will bring you more returns. So how to do this? Bitcoin to USDT. well, the rule at Bitsgap is that you can only launch one configuration per each cryptocurrency pair. But there is a trick. You can trade this Bitcoin to other stable coins, which is pretty much the same as BTC to USDT, the same as to BUSD. You see, the price is like pretty much the same. The difference is in just a few dollars, okay? But anyway, that's the trick for you to launch simultaneously different configurations, but on the same crypto. And by doing so, you can monitor the performance of all these bots, and which one will bring you the most, you will find out. That's the trick for you guys to experiment. And I mean, for example, on this crypto, you can launch SBot with configurations like 40 grids and take profit, stop loss, all of that. Another configuration can be classic bot, but this time on BTC BUSD, which is pretty much the same as USDT. Yeah, you can set here 50 grid levels and yeah, just launch it. You can create another one on what else we have? USDC, right? That's the third stable coin to which you can trade Bitcoin. So we have already 3 configurations that you can set on one crypto, which is Bitcoin. Okay, so experiment with what we have developed for you guys to find your best trading configuration so that you can beat the market as a beast. And in trading, you have all other tools, all other smart trade tools, so that you can minimize the risk and maximize the return with tools like take profit, stop loss, and stop limit. Okay, to trade based on your market conditions. So now let's see what interesting questions you might have. Okay, please explain how the trading up works exactly. Okay, Zen, so let me show you this. Let's go to bots. Oh, actually I have this in my presentation. It's just that, yeah, you're lucky today. So imagine that this was your initial trading range, upper limit, lower limit, and this is where you set your bot. Like in between here you have grid levels, grid buy and grid sell orders, all that stuff. Let's assume the price goes higher, it breaches the upper limit price. As you have your trailing up enabled, this will move the trading range automatically. So basically, answering to your question, trailing up enables the bot to follow the market rally by dragging the trading range. You see, let's assume the price goes even higher, establishes new higher high, then what's going to happen here? It's going to move the trading range, you see? But what if the price falls from that point, like this? In this case, the bot will not follow the downfall, and that's why it is known as the trading up, because it only follows up, it never follows down. Yeah, so that means here that the bot will not trade because the price is no longer within the trading range. But if the price then reverts back, you will see the bot trading again. Imagine it makes new higher high. Of course the trading range will follow, and this can be an endless process. I can show you some real trades that I have. This, I think that's Eufy. Damn, so many trades, like 400. No, maybe not the best example. I mean, I used to have more examples here. Yeah, definitely not the best one. Ren, maybe Ren, let's see. Anyway, like I don't have active trades that have the trading up right now. I used to have them, you see, ING 135, they all had these trading instruments enabled, and that's why I had insane results. So it can be like your trading range, let's say, was initially here, but with the trading up you can be now in this area, like over here, thanks to the trading up, which allows the bot to follow the market rally. Here's the, yeah, actually I have the example. You see, here was my initial trading range over here, and once the price breached the upper limit, the bot started to follow the rally, and that's why you see all these circles where the bot executed buy and sell orders, and that's why it is now trading over here. You see, this is the newly formed trading range from that point up to this point, thanks to the trading. So the trading instrument allows you to maximize your returns as the bot follows the rally, and that's why you always have these opportunities to buy low and sell high for the bot. Let's see what else we have. Yeah, speaking of the futures bots, yes, they are about to be released. We are currently in the beta phase. That means that we have a team which is right now trading futures to spot if there are some errors or whatsoever, because it's not possible for us to release an absolutely raw product. It always takes time to make sure it works the best before all of the users can use it. So, but I guarantee that pretty soon, like very soon, we are about to release the futures bot, which will allow you to trade in two directions. So you can go long and you can short the market to generate returns as the market falls. Okay, so these are two strategies that will be available on futures bot, which will be called, no, I will not tell you the name yet. Let's just wait for the release and you will find out what this is going to be all about. And there will be an absolutely new webcast just dedicated to the futures bot, because it's a bit different. Like, no, it's not actually a bit, it's completely different from the spot bots. So I will have to explain you new metrics and tips and clues related to futures bot. So yeah, just wait, guys. I mean, that's gonna be huge, like a really huge thing for you to use to trade even more, which basically allows you to be exposed to the futures market. And as of now, you are already exposed to the futures market through the futures trading desk that we have. Let's switch. You see, right now I have my 0x with a 10x leverage already trading, $34 in profit. All metrics, key metrics available, like the margin required, margin ratio, liquidation price. Yeah, to analyze the risk, like all the metrics is here already. So right now you can trade futures on the trading interface, and soon we are about to release futures bots. Can you do short sell in trading? You mean in futures trading, right? You mean in futures bots? Yes, short trading will be enabled in futures bots. But you can also short sell the market here at futures as well. You see, market, and I can short sell it at any time. Any available futures contract. It's right here. Can you tell what is the average grid we have to use in the bot? So, as for me, like, I mean, there is no golden strategy, as I always tend to say, because it's all about your trading style and what suits you the most. But as for me, I stick with the grid step of 0.7 up to 1.4. So that's my trading setup for bots, like in most cases. Even though I have some sample trades where I have 180 of the maximum grid levels, but this is the sample trade for you. Like, for you see, it's already 8 months since I launched it. So this was the sample trade I made, but usually on my real account, whenever I trade, I stick with the grid step of 0.8 up to 1.4 approximately. Okay, because this is basically your marginal profit. So 1% is a return per each grid execution. So how you can use other tools to set the grid step. So for example, now you look at the price over here of Bitcoin to USD, and you see that the volatility is somewhat, let's say like this. And you see the volatility here, use the price range from the highest to the lowest here. So the volatility here is like 14%. So that means that around 13 grid levels, no, it's actually 16, I guess. Yeah, 16, around 17 grid levels is gonna be around the amount of grid levels you need so that your grid step is exactly 1%. Basically, I use this tool to estimate the volatility, and I want to make sure that I can seize this entire volatility. So that's why I set the amount of grid levels so that my grid step is exactly 1%. You can actually just type 1, right? But I mean, it's clearly up to you how to you analyze the market and set the amount of grid levels. Just look at the volatility and make sure that you have enough grid levels to capture all this volatility, because you can set your trading range like this. I mean, not narrow like I'm doing, but you can do it like this. You see, from 29,000 up to 120. This is a configuration that you can have, and let's say 80 grid levels. Yeah, so you see, this is like what you can set so that the bot gradually realizes the return. Okay, let's see what else we have. Can you explain the investment change and the bot profit? Yeah, so what you have to understand is that the bot profit is always positive, because that's the return generated in the quote currency. You see, UFI to Bitcoin, the profit is going to be generated in Bitcoins, because it sells the UFI to extract the profit in BTC out of the market. And right now I have 0.016 BTCs extracted from the market thanks to this bot. But you will notice that my investment change is different. So you see 40 in bot profit, but 12% in investment change. Why so? That's the biggest question. And that's because during this period, unfortunately, this cryptocurrency pair was in the downfall. So that means that the value of UFI has significantly depreciated relative to Bitcoin. And that's why I only have 12%, because basically as the price falls, this is a loss for me. And this loss is offset by the profit generated by the bot sorry. So once again, the bot profit is already priced in the investment change. And this is the primary metric for you, investment change. You see, it means that we are exactly up by 12% to our initial investment. Whereas bot profit can be a different number. It can be even 60%. But if you are in a downfall, then this 60% will be used to offset this negative downfall. And let me show you actually the example why automation is something that many traders have been looking for to minimize the risk. So imagine you invested in Quantum here, where I have HODL. Like, you just want to have Quantum in your portfolio and do nothing about it. You expect the market to rally, but what happens is that it falls, and now you are minus 6.88%. This what your HODL strategy would bring you. But in automation, on this downfall, the bot was trading, and this profit you see generated in bot profit, this profit of $23, it is used to offset this huge downfall impact. And that's why in automation you would have only minus 3% compared with a simple HODL strategy where you would have almost minus 7%. So this is a clear example how automation outstrips a simple HODL strategy. It no longer makes sense to HODL the crypto, especially on the downfall, when you have the automation to trade on your behalf, to execute trades, to extract the profit from the market, and you see the bot profit, it offsets this whole downfall by almost twice. So that's why numbers are different. Bot profit always positive, it is in the quote currency, and investment change is the key metric for you to monitor, because that's the only one which shows you how your initial investment has grown up. You see rand to Bitcoin 88%. Why not more than 94? Because you see this short-term downfall, this was something that affected my overall return. You see, that's why it's 88, not 94. So that's the difference between the bot profit and the investment change, and the key metric is investment change here. How to choose best performing pair for smaller investments? Thanks. Well, it just varies depending on the crypto. Let's look what we have here. So apparently Bitcoin now is worth 60,000, so buying one Bitcoin is gonna be quite costly. But of course there are cryptos that are trading at $1 or whatsoever. What you have to remember is that per each order there is a minimum requirement. So on Binance the minimum trade size is $10. So if you want to have 15 grid levels, then at least you must have $150 for sure, because of this minimum requirement. But it can be the case that on the same cryptocurrency, let's say rand to Bitcoin, but on different exchange, let's say on OKEx. I don't know if they have rand to Bitcoin on OKEx, but let's assume. So it can be the case that on OKEx there is a lower minimum trade size compared with the Binance. That means that you can spend less to have the same 15 grid levels. Okay, it just depends on the exchange's requirements. Okay, that's the key point. Carrie suggests you can set your upper and lower bounds near top and bottom of the highest volume, with a stop near the fall of volume. Yeah, that's the strategy that you can use based on these indicators. So I mean, guys, you have this cool feature which is known as the demo mode, and I mean you can create an insane amount of active bots here to experiment, to find which configuration and which strategy suits you the most. Like you can trade based on the volume profile, you can trade based on the overbought and oversold signals that you have from the RSI or MACD indicators. Okay, you can use the moving average crossover to enter or exit the market. So it's clearly up to you to find which one suits you the most. And it's also about the risk management. I mean, the key to success is your risk management. That's it. You don't have to be the Nostradamus on this market, because it's always about the risk management. Because in one trade you can make $100 having a risk of only $30. So that means that this profit can offset the next 3 loser trades. So let's say another trade 2, trade 3, and trade 4. And assume that you were wrong over here. So $30 loss, $30 loss, and here $30 loss. This is gonna be $90, and you are still in profit because you made 100. Okay, so I mean, it's all about the risk management. Make sure that you enter the market with the adequate risk management, and that your target return is significantly higher than the risk, so that in the future you would be able to cover some losses that you will for sure make. You can be 100% right, you will make loser trades, but just make sure that you follow an adequate risk management to neglect this, like to cover up this losing trades and to be profitable in a long-term perspective. Don't be greedy, by the way, as well. Just stick with the plan, don't be greedy, and automation allows you to spend less time in front of the monitor. So and the features like trading up, you no longer have to worry about the market breaching new higher highs while you are asleep. With the trading up, the bot will automatically follow the market rally, so you don't have to worry about this. You see, you can go away for a long time and the bot will just follow the rally. So I think we covered lots of things today, and I hope this was useful for you guys as always. So today was the first time since like 3 months we covered smart trades. So use them to maximize your returns and to minimize the risk. Experiment in the demo mode, and subscribe to our YouTube channel, where we have lots of useful information like how to set the grid bot, other guides as well. Go to the Bitsgap blog, where you have articles related to technical analysis, risk management, and trading setups for the bots. So let me show you Bitsgap. Where is it? Bitsgap. And you see about blog. So lots of information here, like ready-made strategies for the bots. You see, I made this for you guys, just step-by-step guide on how to launch the bot based on patterns, for example. So it's everything here for you. Just have to spend some time to understand it, to use it, to experiment with it, and then find which one suits you the most. Okay, so once again, thanks a lot for your attention. I really appreciate every time you come and spend your time with me, because I really work hard for you guys to make sure that I provide you with as many useful and beneficial information as possible, so that all together we can beat this market. So that's the primary aim, to be useful for me, and I hope that I'm making good here. And I hope you enjoyed this webcast. So thumbs up, subscribe, and see you the next time. Have a nice evening, profitable trading, and stay safe, guys. Hard times right now, but stay safe.